Hey guys, what's going on? So the markets were down on Friday, and we're going to talk about should you get into some of these stocks I'm about to mention, namely NAT, and let's get right into it. So NAT was down 5% on Friday, trading just above $4. And I mean, right now I'm not purchasing yet. I want it to go below $4, and I think it might even go around 350. And I think that's where it may be headed up until Q2. They announced their Q2 results. One of the reasons why was because, okay, so first of all, they own Suezmax vessels, and their rates have been phenomenal year to date. So someone would have to pay them 51,000 to put or to store oil or to ship oil on their tankers, and they solely own Suezmax vessels. But if you look just at this previous week, I mean, this was updated 26th of June. They release a new report every Friday. Their rate, their spot rate, so their daily rate for their tanker ships is now $10,100. And I mean, it's just been in free fall. Even last week it was lower than last week. So this does not look good from an investing perspective. But again, you have to understand that they already contracted their ships out for 75% of Q2 for around $50,000. So, I mean, this number doesn't mean too much, but going into Q3, that might be a problem. Another, positive factor is that now they're reaching their lows. So, spot rates are declining, as you can see here, and it's almost at the levels in 2018, 2019 for this year, but it generally tends to uptrend. So again, I do think that this stock has some downwards move to go, and I think like anything below $4 is a good buying opportunity. I think I'll definitely buy at around the 380, 370 range, and I think maybe even the rates might go lower than 10,100. I mean, another good sign, by the way, is that the CEO's son just bought 50,000 shares of NAT at $4.11. So generally, they've been in the industry way longer than any of us. So I mean, when an insider starts buying shares of their own company, it's sort of looked good upon with investors. And so we'll see where things go from there. Another interesting play might be Euronav, and that's the largest international shipping enterprise, which again focuses on shipping oil by sea. I haven't looked into this too much. It's just another opportunity. If you guys want to take a look at it, they have a pretty interesting, cool website. Looks decently sophisticated. And what I like to see is that they've been increasing their revenue from at least 2017 onwards. They had a couple of down years from here, but this looks really good, and they're actually made a net profit in 2019. Not really sure what happened to in 2018. So this is just a stock that I came upon, so thought I might mention it. Not really too familiar with their business model, but it might be a way to diversify, because not only do they have Suezmax carriers, but they also have VLCC, which are the larger ships. Okay, so next stock I'm thinking of is FB, Facebook. So they dropped pretty drastically over the past 5 days, close to 10%. And I mean, one of the reasons was, I mean, of course, the market was down on Friday anyways, right? But a lot of companies are boycotting Facebook because of Facebook has not been regulating speech. So, I mean, one of the big companies is Verizon. And so it announced that it's pulling ads until Facebook can create an acceptable solution that makes us comfortable. And they're talking about like moderating what people say, so there's no more hate speech on their platform. Right, and I think this started all from Trump's comment that when the shooting starts, the looting starts. And so when Facebook decided not to moderate that, now companies, I believe Verizon, Starbucks, etc., are not putting their ads on there. But again, how long can this go for? I think once Facebook comes up with an acceptable solution, this won't really be a problem anymore. And I mean, the bullish thesis to this is that, again, it's short lasting, and Facebook stands to go above $300 in the short term future. And the reasoning for this is, so, digital and ad market slumped during the early stages of the pandemic. However, the gradual recovery in digital ad spending continues, right? So, and this will again benefit Facebook. And Facebook is just a beast, right? So I'm hoping that Facebook maybe hopefully goes under 200, but even at this, I already have a position in Facebook. I bought it like at 170 during the pandemic. So if it goes under 200, I'll consider adding more, but for right now, it's just a hold for me. Next one, Berkshire Hathaway. And I mean, when you're buying Berkshire Hathaway, it's like buying an index fund, right? So they own so many companies. I'll show you in a second. But I mean, it hasn't down too much, gone down only 2%. So I'd love to see it go down to 170, and then I'll start adding shares. I mean, it's down from, early June by 13%, 6 months. It had highs of, I believe, like close to 230. So it's still down by 20%. Yeah, so I mean, I want it to be below 170, but even right now, 175 is pretty attractive valuation. And just look at some of the companies they own. So, I mean, they obviously sold all their airline companies, but they have holdings in Apple, Amazon, both beasts, American Express, sort of like a Visa company, right? They have their own insurance company, Geico, right? They own Coca-Cola, Kraft Heinz, Wells Fargo, and some banking companies, right? So it's basically like owning an index fund. Except it's led by one of the most prestigious investors of all, Warren Buffett, right? Okay, last two a bit. I mean, I think Starbucks, self-explanatory. Starbucks isn't going anywhere. It might drop. I mean, market cap of 83 billion, has like a 2% dividend yield. So, I mean, this is more longer term. I really like their business model. I think the way that they're going to specialty coffee and specialty donuts, people are willing to go to Starbucks and buy a nice drink, a nice frappuccino, instead of going to McDonald's or Tim Hortons for a cheap one. And again, it's just been beaten down. So this past week, it has gone down by around 4 or 5%. And I mean, I think soon it might be time to buy. I'd like it to go under 65. We'll see what happens. Pandemic, it went down to around $60 per share. So if it goes back down to that level, I will definitely start adding on my position. All right. And again, the thought is that now they're just doing curbside pickups, etc. But once the economy starts to open up again, even past this fear of the coronavirus, Starbucks will just be an earnings beast. Okay. And again, this is just saying, so, I mean, Q2 results might not be the best. And I mean, like, so they had to shut down first in this fast growing market, China, but then in its biggest market, the States. So their Q1 reports weren't as affected by shutdown in the States because that didn't really happen yet. But I mean, now Q2 reports might be very negatively affected because that's when the shutdown occurred during. So, I mean, I'd probably wait until Q2 and see how investors react to that before I buy. But again, I think if it goes down to 60, I'm not sure it will go much lower. So then that's when I'd start to add to my position. One stock I will not be buying is some of the airlines. And I mean, it's looking at a pretty attractive valuation. Something I was looking at was Air Canada. I mean, it was trading just in the 50s before the pandemic, and then it's dropped down to about 70%, and past 5 days, again, down about 10%. And I mean, okay, look, like the price is super low, right? But what I'm thinking is like, an incredible amount of share dilution has occurred, right? So we're just looking at, so they raised a ton of funds, and this basically dilutes shareholder equity. So that just means that, they increase the amount of shares that they have outstanding. And so it takes a larger amount of share buying to increase the price. And they increased, so they have now new massive burden of bonds, notes, and debentures. And again, that's not looking good for Air Canada. And I think like they'll have to pay this debt for a long time to come, right? So it's not just going to be next couple of years, it's going to be next, maybe 5 or so years that they'll have to repay this debt. And that's assuming that the economy is going to open up relatively soon, right? And also one other piece of negative news, though this is just more short term, is that Air Canada increased its refunds on some tickets, right? So first they were just giving people vouchers, right, to spend in the next 2 years or whatever. But now people who bought tickets are now trying to get money from those tickets and not just vouchers. So Air Canada announced that to please people who bought tickets, that they're increasing the refunds on some tickets. They're giving people money. So I mean, all in all, I don't think this looks too good for airline stocks. And again, it's generally an industry that's highly leveraged. So I don't think it's a buy for me, even if it goes lower. Maybe if it goes to $10 a share, I believe it reached well at least $12 at the pandemic lows. But it goes down to $10 a share, I may invest in it just as a speculative play. But I think it will take a long time for airline companies in general to get out of this, right? So that's just my opinion. Again, do your own research before you make any investment decisions, and have a fantastic day.